Paul, we've talked about Zoom before. You want to get after it again?
Yeah, let's go to Zoom. Oh, Zoom, huh?
Yeah, Zoom. We're not using Zoom right now, but let's get after it. So, Paul, we did a show on this many months ago, and when it was completely spiking. And look at this now; it's dropped down a bit.
So, guys, I want to show you. If I told you at this point,
that's right,
that the stock was going to fall 40%, what would you have thought?
It's not possible.
Oh, Paul, you're crazy. Yeah, and look at it; it's down like 35% right now. So I'm just telling you guys, like, these things happen. This is only literally 2.5 months ago, and it's down 35, 40%. Like, you got to just be patient sometimes. The great news is there's 10,000 stocks in the US for US-based companies. Be patient and find 20 or 30 that fit your criteria, and find 100 more that are just that you love that are just aren't selling at the right price. That's it.
Let's get after it, Paul. What is the market cap for Zoom, baby?
$100 billion with a 246 PE. That's a kind of a big X right there. But profit margin's huge, 25%. So we have an X on the PE. We want it to be around 20. It's 246, so it's 12 times higher than it should be. And we have a 25% profit margin. That's pretty good.
Pretty good. Okay, how about revenue growth over the past 5 years is pillar number 3, Paul?
I'm quite sure this is going to be insane.
Yeah.
So 60 million to 622 million, 10 times more. Check mark.
How about profit growth, pillar number 4?
Basically break even to only profit of 25 million on $660 million there, but that'll probably, so that doesn't include the shutdown. Let's look at including the shutdown. Wow, $427 million they made in the last 12 months, guys. That's insane. That's awesome. Good for them.
How about pillar number 5, Paul? Is their shares outstanding? We want that going down, baby.
It is going down, 237 million down to 233.
That's nice, right? Great.
Yeah, that's very nice.
Okay, current assets over current liabilities, Paul.
I imagine this is going to be good as well, Uncle Seth. So current assets of 2.6 billion. Okay. Why is this not? Okay, there we go. 2.6 billion. Current liabilities of 1.4. So check mark there. In fact, total liabilities of 1.55. So quadruple check mark there. They have more cash on hand than liabilities. And I usually subtract this number. It's about $900 million from the market cap, and the market cap's 100 billion, so it doesn't really matter. It's only 1% difference. This company is still massively overpriced.
Should we keep going with the stock, Paul? I mean, it's
no.
crazy.
Let's just sit there and say, guys, Zoom, I'm a no on for a while. What price? I don't know. A lot lower, like a lot lower. I mean, maybe 10 billion, 90% drop or something. I don't know. It's really bad.